In further developments now, Shoprite sales have increased by 12% despite consumers feeling the tremendous financial pinch. The retailer's South African supermarkets boosted sales to reach 195 billion rand, while profit for the year climbed by 3.5% and headline profits per share rose by 7%. Checkers and Checkers Hyper reporting a 12% hike, while Shoprite and Usafe increased sales by a little more than 10%, resulting in an additional 9.6 billion rand spent in stores this year. During this time, the company opened 292 new stores, creating 6,490 new jobs. Shoprite further plans to sell its furniture business with over 400 stores to Pepco for around 3 billion rand. CEO Pieter Engelbrecht joins us now to go through these developments. An impressive showing once again by Shoprite. And yes, consumers may still be feeling the financial pinch, but they're choosing you. Talk to us about why.
Yes, the result of that is a gain in market share again now for 64 months in a row. And if you look at the gross margin, it's almost equal to last year, just one bip down from 24.1 to 24. It means that market share gains was as a result of increased customer visits, where customers elect to come to one of our formats. That's quite pleasing and heartening for us. It means there is something that they like. And it's both digital as well as physical, and hence our expansion into another 265 new stores this year. And we're more and more talking about an omni-channel. It means every store that we open comes in with multiple distribution channels. So yes, you couldn't be more right that we understand and feel the pinch that customers have. And we are very lucky to have such a clear focus between the two major brands, being Checkers in the affluent market and Shoprite in the middle and price-sensitive end of the market. And these two are hedging each other within the South African context, where some things like interest rates, lower of interest rates benefit the affluent market, and maybe wage increases where it is currently benefit the price-sensitive end of the market. But the customers are really desperate for value, and I think that is the result why we saw increase in customer visits, is the value we offer.
What's also more encouraging in an economy such as South Africa, Pieter, is almost 300 stores being opened, but at the same time, the job creation that comes with it. Future plans, particularly towards the end of this year and maybe the beginning stages of 2025.
Yeah, so as I said, I mean, we plan to open 265 new stores. We also have to take consideration for the amount of capex required to keep stores current and relevant and appealing to customers. So if you've got 2,000 stores or 3,000 stores and you've got a 10-year revamp program, it means that you have to do like 200 or 300 stores a year, and sometimes it costs even more than opening a new store. So we are quite capital intensive. We spend in the South African market in excess of 8 billion in capital every year. Investment into digital, new stores and revamp mostly. And we also now start to see good returns on those investments of past years on the other income line, where that very data-rich information we have around customer behavior, not customer info, but customer behavior information, that now also brings us additional revenue stream. So we continue to invest. We invested in the supply chain and the new stores, and that any green shoot in the economy, we do believe we will benefit from that.
It's also at a time where South Africa is seeing inflation dropping, although at a marginal rate. But the encouraging news that we got earlier on today is improved economic growth in this country by that 0.4% recorded for the second quarter. Let's maybe discuss how Shoprite intends on capitalizing on that, but also maintaining its price stability, which is quite sensitive.
Yeah, you're right. Inflation last year, January, we come from a high of 13%. In June last year, we were at 8.6%. We're now at 3% in June this year. So it also helps the consumer. I mean, if you're a price-sensitive customer, you don't have additional discretionary income. So if inflation keeps at high levels, and lower inflation doesn't mean prices come down, it just doesn't increase so fast. So what must I do? I don't have the money, so I must buy less items if inflation stays at level. So although it's commonly believed that high inflation is good for retailers, there comes a point where the consumer can't anymore. And that's when we really come to our strength is people know what we stand for. We are the cheapest supermarket in South Africa, and we give best value every day. And we use every means possible in the data and artificial intelligence and all the help we can get to make the most educated decision for our consumers.